When it comes to looking for a high quality stock that pays a dividend monthly but also has massive growth potential, one of the names that always come to mind that I've been investing into for years is ticker symbol MAN, or Main Street Capital. Now in this video, we're going to dig deep into this monthly paying business development company, go over all it has to offer, and even show you how this stock has crushed the S&P 500 over multiple different time frames. Now stick around, drop a like down below, and subscribe for more future content like this, and let's get into it. So heading over to Main Street Capital's website, it says a true financial partner. Main Street Capital, based in Houston, Texas, has helped over 200 private companies grow or transition by providing flexible private equity and debt capital solutions. Privately held businesses turn to us because we are Main Street, not Wall Street. We build reputations and tailor transactions to meet the unique needs of our portfolio companies and their owners. It then says customized capital solutions. We provide a one-stop capital solution, private debt and private equity capital, to lower middle market companies and debt capital to middle market companies. Main Street's lower middle market companies generally have an annualized revenue of around between 10 and 150 million. While Main Street's middle market debt investments are made in businesses that are generally larger in size. Through our two business segments, we offer entrepreneurs, business owners, management teams, and financial sponsors a number of advantages to help each business realize its full potential and generate wealth for its owners. So Main Street Capital really is sort of a partner with a lot of different businesses, and they help give flexible loans to different size companies that need it. Then Main Street Capital has all their different companies that they've worked with, and there's tons and tons of companies in there in many different industries with a very diversified portfolio. Now some more information, it says 195 cumulative investments. Also important, there's around 6.7 billion in capital under management as of right now. Now looking a little bit deeper into Main's performance, year to date, Main is actually up, while pretty much everything across the market in this sort of space has been very red. Main is up 12.21%, and keep in mind that is not even including dividends, which they offer a massive dividend, which we'll go through here in a second. Now over the last year, Main's up around 17.41%, but on the longer time frame, and that's since around 2007. Now Main Street Capital is currently trading towards the higher end of the 52-week range, around $40 per share, 31 being the low and around 43 being the high. But still, for more longer term investors like myself, I've still been grabbing some shares of Main not all that long ago. Now another important aspect for investors when it comes to Main Street Capital is of course the dividend, and they offer a starting forward dividend as of right now at around 7.03%, which is not bad at all. Main Street Capital also does pay a dividend monthly of around 24 cents or so. And as you can see, historically Main Street Capital has paid out a dividend over a long time frame. Now when it comes to Main Street Capital's dividend and coverage ratios, Main has excellent coverage, with the potential for additional dividend increases from here on further, and or even supplemental dividends, mostly due to continued improvement in net interest margins, as well as NAV per share increases and realized gains. Now because of this, a lot of investors, including myself, are expecting more dividend increases. Main also said in a recent earnings report, they said our distributable net investment income in the second quarter exceeded the monthly dividends paid to our shareholders by 66%, and the total dividends paid to our shareholders by 24%. The strong performance allowed us to deliver significant value to our shareholders, while still conservatively retaining a meaningful portion of our income and growing our net asset value per share, which is very important. In addition, our strong second quarter results and favorable outlook for the third quarter resulted in the declaration of an increase to our monthly dividend for the fourth quarter of 2023 to 27.5 cents per share supplemental dividend to be paid in September 2023. They also said this September 2023 supplemental dividend represents our largest and 8th consecutive quarterly supplemental dividend, along with 5 increases to our regular monthly dividends over the same period, and results in 30% increase in total dividends paid in the third quarter of 2023, and a 24% increase in total dividends paid year to date through September 30th, in both cases compared to the prior year. So with regular monthly dividends and supplemental dividends, investors of Main are basically getting cash tossed in them from every direction. Now I think I bought my first shares of Main Street Capital maybe 3 or 4 years ago, and have owned some shares of the stock off and on since. But what's absolutely crazy is that if you look at Main Street Capital and stack it up next to the S&P 500 and look at total return as the metric, so this is total return meaning price return plus dividends included, I promise you I'm honestly going to blow your mind when I show you the actual returns that Main Street Capital has had over multiple different time frames. So for example, Main Street Capital over the last 6 months has returned 8.12%, where the S&P 500 has returned around 8.27%. So S&P 500 wins on the 6-month time frame. But year to date, that fast, Main Street Capital is already smoking the S&P 500, up 18.07%, where the S&P is up 12.44%. Now, over the last year, 365 days, Main is up 25.77%, where the S&P is up 15.61%. The S&P being up almost 16% is impressive, but Main is absolutely blowing the S&P out of the water. And keep in mind, paying monthly dividends while doing so. Now, over the last 3 years, this has been the most drastic time frame that I found. Main Street Capital is up 78.39%, where the S&P is up 28.29%. Now, on a 3-year time frame, normally a 7, 8, 9% annualized return is pretty decent, but Main Street Capital is up almost 80%, which is absolutely extraordinary. And finally, over the last 5 years, a little bit longer, Main's up 64%, where the SPY is up almost 48%. So pretty much almost on every single time frame, Main Street Capital has absolutely been smoking the S&P 500, which is crazy to see. Now that of course begs the question, is there that much more growth potential from here for Main Street Capital, or is a lot of the growth already baked in? And of course, because Main Street Capital is trading towards the higher end of pretty much the stock's all-time price, that most definitely could be the case. Another thing that helps me sleep well at night being a Main Street Capital investor and holder as of right now is the fact that on Simply Safe Dividends, it is considered a safe dividend at a 62 safe score. Simply Safe Dividends said, signs of an economic slowdown and rising interest rates have heightened concerns that companies with limited financial flexibility will likely come under more stress than others. A deteriorating economic backdrop is particularly worrisome for business development companies like Main, which provides debt and equity financing to relatively small and highly levered companies that cannot access traditional financing. They then said, given the firm's industry-leading portfolio plus the BDC's solid debt profile and distribution coverage, we are reaffirming Main Street Capital as a safe dividend safety score. And also not to mention, Main Street Capital's payout ratio currently sits close to the lowest that it's seen since around 2018, providing a somewhat larger margin of safety compared to its dividend coverage prior to the lockdowns. So when it comes to finding the so-called perfect investment, the things I look for is a solid business model, which Main definitely has in my opinion, historical growth, which Main definitely has had, a nice starting dividend yield, in this case, a massive starting dividend yield of around 7%, and a monthly paid dividend, which definitely is sort of a cherry on top. I don't necessarily care if a dividend is paid monthly or quarterly. It doesn't necessarily mean that a stock or an ETF is better or worse, but let's be honest, who doesn't like getting more cash flow more frequently? But that being said, even with the current higher interest rate environment that we're in, and with some of the company's future in Main Street Capital's portfolio, I still think Main Street Capital is well diversified, well capitalized, and on top of that, ticker symbol Main will most likely remain in my portfolio for many years to come. But when it comes to Main Street Capital, is or is this not a stock that's currently in your portfolio? And let us know down below why or why not. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.